Hello traders, this is Brian from FinancialTradingJournal.com, and today is October 26, 2013, and welcome back to this week's FX Weekly Analysis. I don't really have much to say prior to starting. I will be doing a full FX Weekly Analysis this week, so the last 2 weeks I only focused on either the daily or 4-hour chart or weekly chart. This week I'll be going through all of the chart timeframes again, because it's been 2 weeks now. Aside from that, the only news that we're expecting this week to have a big move will be FOMC on Wednesday. As always, FOMC will always have a big reaction. In August, we went down on most pairs, and then in September we went up due to the non-taper news, which was a surprise announcement. Going into this week, the expectations is they will be starting to taper early 2014, so February, March, April, somewhere in that time frame. That's when they'll start to taper. That's already priced in because that's the expectation to come. If they announce that it's going to be later or earlier than those dates, then possibly we'll get a reaction on the pairs across the board. So that's all I have to say prior to starting. So let's get started. So first up, as usual, we have the dollar CAD. Dollar CAD monthly chart. Looks pretty good because we are still inside of the weekly channel that I drew previously. Previously, I had a theory that it might break downwards following a pattern here where we had green, red, and a possibly red candle, but we have green, red, green. We still have about a week left of this month, a few days. Not a full week because it's 26, right? There's about 5 days left of this month, including the Sunday tomorrow. But that's realistically only about 4 days of trading. But given, unless we move down drastically within the next 4 days with the FOMC, then this month closing green shows that we are still inside the channel, which is good for bulls moving forwards because we will hopefully start retargeting the old highs of these magenta line and the black lines up there. Those were my old targets from way back when because I drew them quite a while ago. So that's the monthly chart. Weekly chart just reinforces that we are within the weekly channel, and we also have a bullish engulfing candle this week. This candle engulfed that candle, the red candle from last week. So that's a good sign for bulls. What we want to see is continuation this week. Another green candle, and hopefully a good one would be able to break the highs of these candles and the current high as well, because this line, as you see right here, I don't have a line drawn, but this is a high over there as well. And you'll notice how this has a high, a lower high, and the current high. Over here we have a high, lower high, and the current high. So if we can break this line here, going up, we want to target this one, break this, and then target the magenta and black lines above. So that's it for the weekly chart. Daily chart is basically a simplified version of the weekly chart because we already had the engulfing a few days ago. Engulfing that candle went up. The only thing I'd say about the daily chart and the 4-hour chart is I was surprised that the daily chart did not drop further. I thought it was going to break the magenta line, and then temporarily anyways, and then target these aqua lines below. These were the support lines that I drew last week. If they had dropped down to here, then that was where I was looking to load longs, but it never got down there, so I don't have a position on dollar CAD. But it did bounce, so that's good for bulls, like I mentioned. As long as we continue to make higher highs, then it should be good, because if you compare the short-term price action here, you had lows, a higher low, and then comparing the highs here, if you compare it over here, high, a higher high, higher high. So going forwards, we're looking good for both. As long as we continue to make higher highs and higher lows, then moving forwards, it should be good. But on the 4-hour chart, a potential problem that we have right now is this pin bar right here. This is a shooting star candle, which could be a reversal candle in the short term, which is okay because we did make a higher high compared to this high. So even if we do drop now, as long as the low is higher than this previous low, then we should continue moving upwards and continue to test the resistance levels as price moves upwards. So that's it for the dollar CAD. Up next we have the Aussie dollar. Aussie dollar monthly chart. This was an interesting pair this week. I missed the trade, but on, I think it was either Wednesday night or Thursday night, I don't remember exactly, but Australian data came out that caused price to surge above the 97 level. It went as high as, I believe, 97.50. I didn't want to trade near Australian data, and I kind of went to sleep before it came out, so I didn't watch it exactly. But it went up to that level, like the next morning I saw it, went up to that net level, 97.50, then it went down afterwards. So I mentioned last week that Aussie dollar was near a potential reversal point, and we might have hit that point this week. And I did mention that it would move up before moving down, and 97 would act as a pivot point to shoot price in either direction. So 97, 97.50, it's all in the same relative region. We did hit that level, and we proceeded down. And the markets closed at 95.84 at the end of the week, so we moved roughly about 160 pips off of the highs. So whether or not this is a reversal yet is yet to be seen, because the monthly chart is still closing, at this point anyways, will close green, and that is a relatively same candle as last month's, and we'll see if it can continue moving up next month or not, or we'll see by the end of this week basically, because this week will close the monthly candle. So we did bounce off of the 50 fib level short term. If that level holds, then we should be targeting back down at the 89 level. If not, then we'll be continuing upwards towards parity and the 0.99 level, which is the 61.8 fib level. So that's it for the monthly chart. Weekly chart, we do have this bearish candle, because this is an exaggerated pin bar, because the candle is the body is much bigger than the wick. So this is more of just a regular candle. It's just a red candle, but it is bearish, considering that we closed below the 97 level and below the 50% fib level. So that's good for bears going forwards in the short term, but we need confirmation to continue dropping. We need to break support levels on the way down. The major support level that I drew previously was at the 93 level. That's about 300 pips down from here. But above that, you have the 95 level. So basically, we want to break that high to get into this zone. So basically, the fib levels act as zones. We have the top zone here, then the middle zone, and if we break that, then we're going back down into this zone, and then below that, you have the big zone below that. Otherwise, if we go back up, then this is another zone targeting the 99 level, or the 61.8 fib level, or the parity, which is right above that, which is 100 pips above that. So that's around right here. So that's all for the weekly chart. Daily chart, we are testing the trend line right now. So this is effectively what will determine what direction we go next week. Do we break the daily trend line and we continue moving back down, and that will effectively be the end of the pullback retracement, and we will be continuing the trend? Or do we bounce now and continue the pullback and target, as I mentioned previously, the 99-cent level or the parity level? So that's what we're looking at moving forwards. 4-hour chart just shows a magnified version of that. The 4-hour chart does show that we did break the 4-hour trend line already. So we broke it and we closed below it, and then we retraced that. But we didn't break any significant support levels yet. The biggest one is right here. So you notice these cluster of highs there and the cluster of lows here. This region, basically hovering around the 38.2 fib level, this region is your effective support. So in order to continue moving down, it has to go all the way down to here, test this level, break it fully, maybe go down to somewhere here, bounce back up, test it again, and then boom, go all the way straight down. That would be a perfect scenario for continuation move downwards. So that's all I have for the Aussie dollar. Now up next is the euro dollar. Before I start the analysis for the euro dollar, I have to disclose that I currently am holding short positions on this pair. So just FYI, I might be biased in what I'm about to say. So anyways, on the monthly chart does not bode well for my position, because it shows that we could potentially be targeting the monthly trend line up there, which is at 1.4, which is a round number, which is about 200 pips from here. But since I am holding a short position, I'm kind of biased in terms of I don't think it's going to get there. If you were to draw a trend line from, say, here to here, we're pretty much at the top of the trend line. So this is a trend line that I have something similar drawn on the lower time frames, but on a higher time frame, this is effectively what I'm looking at here. If you connect the highs there to there, this is effectively why I think price will be stopped here at the 3.8 level and then proceed to go downwards again. So that's all I have to say for the monthly chart. On to the weekly chart. Weekly chart, as I mentioned previously, I had other lines drawn. These are the 3 lines that I drew from previous weeks. This one is connecting those highs there, and we're at the high of that. So this is technically, if you want to be, this is a converging point of the monthly trend line plus the weekly trend lines here. So this is a nice reversal point if it can. Short-term reversals levels will go down about, depending on how fast it moves, between 200 300 pips. That's short-term, targeting the 3.5 level, because that is the bottom of the trend line, depending on how fast you can get there. Either 1 or 2 weeks we might be able to get there, considering FOMC is this week as well. Going forward, if we break the 3.5 would effectively break the daily trend line over here, and that would cause markets to continue moving down to the old support down here. But in the interim, we do have other support levels at 3.3, 1.31, and possibly the 1.3 level as well. But otherwise, the ultimate target is 1.275, and then below that you have 1.2 and 1.23. So that's all I have to say for the weekly chart. Daily chart, we do have, I guess, some type of struggle at this point, because you'll notice we have these moves here. So we consolidated here for quite a while. Big move up, consolidation again. Big move up, consolidation again. Are we going to have another big move up, or are we going to stop here? Notice here we only had 2 consolidation days and then moved up immediately. Here we've had 4 so far, or 3. Based on previous price action, if it looks anything like this or this, it might start to struggle as it moves up, because you notice the candles are getting smaller on the way up. Because if you notice, this candle from here to here, this is the first big candle, but from here to there, comparing these candles here, is not that big of an improvement. Here to there, not that big of an improvement. Even here to there, if you want to conclude that this big candle here was the spike, if you will, then we have not moved up that much more. So given that the green candles have not moved up much more compared to the previous candles, that shows that the bull is weakening and the bear strength might start to show itself sometime soon. So the targets, as I mentioned, is 3.5. So on the weekly chart it wasn't as clear, but if you look here, this is the 3.5 level effectively right here, and this is where the trend line hits. From here down to here, that's the projected path for the coming weeks, assuming the FOMC is positive for the US dollar. So that's all I have for the daily chart. 4-hour chart doesn't really show much, it just shows more consolidation. This consolidation is different from this one. This one was more of a triangular shape. This one we kind of have a bull flag, but given where it's at, this the monthly trend line and the 4-hour trend lines will effectively determine whether price is going to hold here or to drop here. If the monthly trend line does not hold it, then we're going to go up and target the big monthly downward trend line at 1.4. But as I mentioned, I have a short position, so I'm biased. So take what I have to say with a grain of salt. Lastly, we have the pound dollar monthly chart. Pound dollar monthly chart currently has a doji on the monthly chart. These candles could be a sign of reversal. As you might notice down here, we have the same dojis here, dojis all around here. This could be the beginning of the fall, assuming this candle closes like this. If not, then we might still aim to hit the 1.63 level, which we have not done yet. As you'll see on the weekly and daily chart, we, for the most part, have only stuck to the 1.625 levels. So moving forwards, ideally we want to see the 1.63 level get tested and then move down, and then moving down we want to break the old monthly trend line and then continue moving down to here. That's the long-term target based on the weekly channel, because we have not really moved down yet. We've just been moving up for the past quite a while now. If you look on the weekly chart, we've been moving up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 weeks now, which is 4 months, which is quite a while. I think it's soon going to be time for a reversal. You'll also notice there's a slight double top there on the 2 wicks. You notice price has yet to close above the current market price with these wicks here, similar to how those lines are there. So if I wanted to draw, say, a rectangle, for example, to show the supply would be this entire region right there, based on how price has been rejected from that region. But we have yet to touch the 1.63, which is where the bigger orders are, because that's the exact tip of the wicks over there. But anyways, moving forwards, I kind of expect price to move down because we've been moving up for so long. We haven't had a proper pullback yet. This pullback from here to here was only about 350 pips. The proper pullback would have been down to the 575 level or even the 55 level. But those are the targets moving forwards. So that's all I have for the weekly chart. Daily chart, moving down, so we have to break the trend line. The daily trend line has to be broken and it has to be a good close. This one over here was kind of a fake close, and that caught a lot of bears. That was more of a bear trap over there. I got caught in that one, so that was a bad trade over there. But over here, it does look attractive for a short. But moving forwards, and I haven't talked about this yet, the contingency plan is if it breaks above these trend lines, the monthly trend line, the 6-3 level, if it breaks above this, up here we don't really have that many targets. Like, it might just be, if it breaks up here, then it's going to be a rocket ship all the way up to 6.7, 6.8, or even the 1.7 level. So that's the potential downside risk to these trades if you are planning to take a short. So just be careful, because if it breaks the supply level up here, then it's going to go up quite a while, and that would pretty much be a wet dream for bulls. So if you're a bear on this pair, be careful, because we are at a pretty critical moment, kind of like the euro dollar. Then lastly, for the 4-hour chart, I'm just going to remove the rectangle here. Just give me a minute. The 4-hour chart, what you'll notice is we have different regions of consolidation. We had consolidation over here, consolidation down here, and more consolidation up here. The only difference I want to outline is between this consolidation and this consolidation over here. This one, you'll notice we went up, went down, went up again, and then went down, and then broke down. That was only a total of 1, 2, 3, 4 bounces. Here we went up, down, up, down, up, down, up, down, up, down. A lot more bounces, and we're still stuck here. So price has yet to break down. Over here we broke down on the second bounce down. Over here we did not break down at all. Currently we're holding this level, which is the 1.612 level. That's the low. Based on price action here, making higher lows here, but not higher highs. So we're kind of forming a symmetrical triangle in the short term. We'll see what happens when price breaks out, either under to go down or above to hit the 6.3, and then the 6.3 will be the determining factor on the upside, but the downside is 6.12 for the determining factor, which also coincides with the daily trend line as well. So this trend line has to break and hold and then continue moving down, and that will be a good move for bears. So that's it for this week's FX Weekly Analysis. Hope you guys enjoyed it, and I will see you guys next Saturday for next week's FX Weekly Analysis, which should be more interesting because by then the monthly charts will have closed.